This is a research paper that I released on my Substack only a few days ago. To bring that research to life, I made a tool to make use of it. I'm going to show off parts of it in this video. Starting off in the top left, we have the SPX open and close information. And there is a couple of unpopulated cells here that get populated once I press this second button. Now, this gets the open on the SPX for the date above. However, the day I'm recording this is the 29th. So this number here is not quite right. So I'm just going to get rid of it. Now, I could simply change this date information myself, but I've programmed that into this button. So let's see what it does. So firstly, you might notice two things have changed. One, the date information is now correct, but more importantly, the right-hand side just got filled with today's U.S. economic calendar. And this is where the research paper comes in, right? These highlighted events are the significant events found in that research paper that show dislocations to either the intraday high or the intraday low. And for today, it looks like we have some low risk to the downside and some high risk to the upside, which just means that, historically, days like these were often good times to have long exposure to the market. Now, combining these signals with some measure of central tendency, and I like the moving median, so that's what I have here, but really anything could work. We combine those to get an expected basis point move for both the high of the day and the low of the day. But that doesn't give us the information we're looking for because we've got to do a little bit of work. So we want, at the end of it, just a number on the S&P 500 that we can look at. So let's get that. So once I press the second button again, firstly it fills this open price correctly. But it also gives us predictions on the level of certainty of where the intraday high will end. To read this, it's very simple. This first item means that there is a 50% chance that the S&P 500 won't exceed 45.94 that day. The second item means that there's a 70% chance that the SPX won't exceed 46.05 for that day, and etc. Now on the downside, similarly, right, there's a 50% chance that the SPX won't exceed, or won't drop below rather, 45.64 for that day. And that goes for the rest of these two. Now, I think that this information can be quite useful for investment managers. But let's say that you have a dangerous short position, highly correlated with the index, and you just got surprised by the GDP data release. And now you really need to hedge just to buy yourself time to figure things out. Well, by using this information here, you can know exactly where you want to put your hedge. Maybe you want to buy some calls at the 84th percentile of the intraday high, just as an impromptu stop loss. Or maybe you want to lower your delta for the day and you're not too scared of the GDP data release. Well, if you need to lower your delta, you could sell puts at the 70th percentile of the intraday low. Now, that's just one way that can be useful. In my research paper, I discuss a multitude of other ways that could be used, but even that just scratches the surface. So, there we have it. Those are the basic features of this tool. Also program some nice to have features, right? Maybe you want to get the whole week done, right? So we can do that very simply by taking the economic calendar from the web, and I like this one, so let me just copy this as text. I put this into my data input tab, and I just press get economic calendar again. And there we go, right? So now we see that we have the whole week, Monday, Tuesday, Wednesday, Thursday, Friday, and the current day, today's Wednesday 29th, is highlighted differently than the rest. So there's just a couple of nice to have features, and that's just one of them. Right, and most of this is done with basic Excel features, you know, VLOOKUPs, index and match, conditional formatting, and a little bit of VBA as well, just to do the web scraping that's necessary. Right, so if you're looking for a little bit of web scraping, and I'm not going to publish this anywhere because it's not particularly good, here we go. All right, fantastic. Thank you for watching.